Hello everyone, my name is Suhaib Ahmed and today I will be presenting on characteristics of accounting information. And this presentation I will explain the basic concept of accounting information and the key compliance requirement for business. During this representation, you will understand what accounting information is. You will also learn the qualitative characteristics of accounting information. You can also distinguish between fundamental and enhancing characteristics, and you can also learn how to apply the concept in real business situation. Now, what is accounting information? Accounting information refer to financial data that helps users make economic decisions. Example include financial statements, profit and loss reports, balance sheets, cash flow statements. Now, what are the user of accounting information? So there are many users, some of them are investors, management, creditors, and banks, governments and tax authorities, and also employees. Now, what are the qualitative characteristics? So the IFRS conceptual framework identifies qualitative characteristics that make accounting information useful. They are divided into fundamental characteristics and enhancing characteristics. Now let's move toward the fundamental characteristics. Fundamental characteristics determine whether financial information is useful. They include relevance and faithful representation. Let's move toward relevance. Information is relevant if it influences decision making. Relevant information helps users predict future outcomes and confirm fast evaluation. Now, materiality, a part of relevance. Information is material if its omission or misstatements could influence decisions. Example, a large error in revenue reporting is material. Now, let's move toward the faithful representation. Financial information must represent the economic reality of transaction. It should be complete, neutral, free from error. Now let's move toward the enhancing characteristics. Enhancing characteristics improve the usefulness of accounting information. They include comparability, verifiability, timeliness, and understandability. What is comparability? Users should be able to compare financial statement over time and financial statement between companies. And what is consistency? Consistency means using the same accounting methods across periods. This helps improve comparability of financial statements. Let's move toward the verifiability. Independent observers should be able to verify financial information. Example, audit evidence, invoices, bank confirmations. Now, what is timeliness? Financial information must be available when needed. Delayed information loses its usefulness. Now, let's move toward the understandability. Financial reports must be clear and easy to understand. Proper classification, presentation, and notes helps user understand this information. Now, how you can apply it in the real business? So example, in business, a company financial statement shows revenue, expenses, profit. If the information is accurate, timely, and comparable, investor can make better decisions. Importance of high quality information. High quality accounting information improves transparency, investor confidence, business decision making, financial reporting credibility. Conclusion: the qualitative characteristics of accounting information ensure financial reports are useful and reliable. Fundamental characteristics make information useful while enhancing characteristics improve its usefulness. Thank you.